Be Wealthy and Smart, episode 1467.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how the market has turned bearish, and this is something we haven't seen in really about 15 months. So this is a big change for investors who've been erring more toward the greed side than the fear side, but things have really changed. According to the individual investor poll, investors are the most bearish towards U.S. stocks in 15 months since November of 2023. Pessimism on the outlook for stocks over the next 6 months jumped to 42.9% of respondents in the American Association of Investors poll from 34% last week. The historical bearish average is just 31%, so at 42.9%, we're way above average. Bullishness towards stocks tumbled to 33.3%, down from 41% last week, only the lowest in 3 weeks since mid-January. The historical average of bullishness is 37.5%. Those who are neutral on stocks accounted for the balance. Investors were asked a special question this week, and the majority, 52.5%, said U.S. stocks are overvalued. Slightly more than a third, 36.9%, said valuations are mixed, with some areas expensive and others cheap. Only 7.1% said stocks are fairly valued, and 1.4% said stocks are undervalued. Now, historically, when this poll turns bearish, that's a very bullish indication. And as a contrarian investor, we want to always look at the opposite from what the crowd is doing. So the crowd is saying they don't think stocks are fairly priced. They think they're a bit expensive. 52.5% saying they're overvalued. And this is a very bullish sign. As I've mentioned many times, the fifth year of the decennial cycle is a very bullish year. And the fact that we've had some bumps along the way has spooked a lot of investors. But nonetheless, this year should end up to be extremely positive. So in my view, any of these dips or any of these pullbacks should be taken as buying opportunities, whether it's in stocks or in the crypto markets. The fear levels are high, and that's a good sign because bull markets climb a wall of worry. That means investors have to be scared in order for markets to go up. When investors get overconfident and are certain that markets are going to go up and they're on the greedy side of the scale, that's usually the top of the market. But when investors are scared and they're on the pessimistic side of the scale or the fear side, that's a very bullish sign. So take this as an indicator that these dips are going to be great buying opportunities. And especially in the second half of the year, we're seeing very, very strong performance coming, in my opinion. So keep your emotions in check, buy these dips, and you will be well rewarded for taking action. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.